Hey everybody, Rob Maurer here, and today we're going to be talking a little bit about the macro environment and inflation. We've also got an update on Tesla's cold weather performance, those issues that we've been talking about over the last couple of days, new notes from Morgan Stanley and Global Equities, updates on Berlin, Texas, China, and more. Finally, some overperformance here for Tesla stock, finishing up almost 4% on the day to $1,106.22, while the Nasdaq was only up 0.2%, even though it was up quite a bit higher this morning after inflation data did come out. Like with many of these reports or events, my speculation here is that the market is reacting positively, mostly due to the removed uncertainty, kind of getting through that potential downside event. Because in this case, the CPI, Consumer Price Index data, came in pretty much right in line with expectations, increasing 7% year over year, 7.0%, and rising 0.5% month over month, so from where the index was at in November. Now, these are really high inflation rates, and this is going to continue to be a hot topic of conversation. So I wanted to spend just a minute here talking about how this might play out over the next few months. As you can see, the inflation rates year over year have continued to increase now up to the 7% level from December year over year, but it does seem like maybe it's starting to top out a little bit. And looking at the month over month changes, this 0.5% for December, that is down a bit from the rates from October and November, which increased at 0.9% and 0.8%. So inflation's still increasing, but at a little bit slower of a rate. So that month over month is going to be an interesting indicator to watch as we go forward. And the year over year, I want to talk about because there are going to be some changes here as we start to come up against the start of high inflation from last year. My hunch is that we're probably within a couple months here of those year over year numbers peaking. And I say that because if we look at this chart again, the 12-month performance, we can see that inflation was pretty normal for December 2020 and then January and February last year, starting to increase a little bit in March and then really spike up in April and continue on from there. So if, for example, we look at this December 7% increase that we're reporting on today, that is coming off of a 1.4% increase in December 2020 year over year. So on a 2-year basis, that's an 8.5% increase, about a 4.2% compound annual growth rate. As I said, then you've got similar low bases in January and February, but then even if we just go into March with that small little tick up there, that was a 2.6% increase from March 2020. So if we think about this upcoming March, you'd only need a year over year increase of 5.7% for March 2022 to see that same 8.5% increase on a 2-year basis that we're seeing here for December. If we get to March and we see that same 7% increase that we're seeing now, that would actually be a 10% nearly increase on a 2-year basis instead of 8.5. And March is just the start. You really start to see the spikes there in April, May, and beyond. So I'll use April as that last example. You would only need to see a number of 4.2% in April 2022 to match that 2-year basis from this report for December. So put simply, I think it's very likely that heading into March and April, we're going to start to see the year-over-year increases in inflation naturally trend down to what would be more normal levels, which, I don't know, it doesn't necessarily mean it's better. You may actually want to see some periods of no inflation or deflation to offset the big increases that we saw in 2021 and return those 2-year growth rates to more normal levels, but that carries its own concerns as well. Anyway, if this does happen as I expect it to, I think the narrative will change pretty quickly around inflation. That doesn't necessarily mean that it should, but I expect that it would. As for what the market will do with that, how much of that is priced in already, who knows? That's an entirely different conversation and probably very, very difficult to guess. Nevertheless, I would love to hear people's thoughts on this conversation in the comments today. And then as a reminder, tomorrow pre-market, we will get the PPI, so Producer Price Index. The expectation for that is up 9.8% year over year or 0.4% month over month. All right, getting into Tesla specific stuff, we do have a couple updates here on the cold weather performance issues that we've been talking about over the last couple of days. Tesla Owners Online yesterday tweeted out that Facebook owners group conversation that we went through yesterday. So that definitely saving us some time today, but Elon did reply to that Twitter thread and said, "Great explanation." So nice to have some confirmation there from Elon that what we went through is what Tesla seems to be doing. And we've got a report from Drive Tesla Canada that Tesla is already installing a software update 2021.44.30.6 on some vehicles, and they say that, quote, Drive Tesla has been told by a source that it contains fixes for the recent heat pump failures in extreme cold temperatures, end quote. Looks like they were testing this first on some employee cars, but are now starting to roll it out to customer cars, though it does appear to be VIN targeted for cars in colder climates. Obviously, the best issue is no issue, but pretty cool to have kind of followed this process over the last couple of days and just see how quickly Tesla is reacting, responding to this, and implementing a fix. Obviously, the efficacy of which remains to be seen, but the speed here is just incredible to witness, and it's really tough to imagine any other automaker being able to handle something like this as quickly. And this is just one situation. Tesla is acting with this sort of pace across so many different areas of their business. This stuff right here, this is the kind of stuff that people that follow Tesla very closely understand, where other people just don't get it. This has kind of always been the case for Tesla, and even with way more attention on the company now, it still is. All right, next here we've got a couple analyst updates. First from Morgan Stanley, who I think has had, 3 notes this week? And Adam Jonas once again proving that he would be an excellent YouTuber, not just with the amount of content, but with these concepts here. So this Tesla note is titled, quote, Apple, Tesla, and the mobile metaverse, end quote. The basic concept is that once autonomous vehicles happen, people are going to have a lot of extra free time sitting in those vehicles. Jonas saying that Tesla's got a head start on capturing the value of that time, I guess, and asks the question of, can Apple achieve second mover advantage yet again? Then basically the entirety of the rest of the note, it's a very short note, it's just a bunch of questions. Mostly just different ways of asking, could, should, or would Apple make an Apple car? You can read through them there if you want, but we're going to move on, really just talking about it because I'm sure it will get some coverage. The other analyst update is from Trip Chowdhury of Global Equities Research. So we've been talking about his sort of delivery checks, I guess, at Fremont. Seems to be pretty happy with the activity there. He's increasing his price target from $1,200 previously, now up to $1,500, while increasing his non-GAAP earnings per share expectation for fiscal year 2022 to $9.95. All right, next up, we've got an update on Giga Berlin. Minister of Economics for Brandenburg, Jörg Steinbach, spoke with the media today and answered a couple questions. One of those was in regard to the water supply court case that we talked about earlier this week, and Steinbach confirmed that this is a separate thing from final approval. So that matches up with what I had said my understanding was, and it's good to have that confirmation. As for that final approval itself, same old stuff that we've heard. They are in the final steps. Steinbach didn't want to talk too much about that, and he said he doesn't want to talk about it in the coming days, essentially because he doesn't want to create the appearance of having put political pressure on for the approval happening. Now, doesn't mean anything is imminent, but I don't know, taking that maybe as a small positive sign. All right, moving on to Giga Texas. We've got an image shared here that's kind of interesting from Joe Tagmeyer from his drone. A couple of interesting things in this photo. First off, kind of in the foreground, you can kind of see a Model Y body, some seats. They seem to be set up for display, kind of similar to what we saw at Giga Berlin when Tesla had the GigaFest. So maybe some very early stages of Tesla setting up for something like that at Texas. And then in the background, there's some weird perspective stuff going on here, but you can see what appears to be 4 or 5, maybe finished Model Y vehicles. So definitely getting close there for Texas, and I continue to believe that we'll just hear from Tesla on that in the shareholder letter and earnings call in a couple weeks. One other update on Texas I want to share, but just throw a whole bag of salt on this first, is a post from Ron J on Tesla Motors Club Forum, who says, quote, big news, I stopped by my local Tesla sales service delivery center today and learned that they have received the info, including VIN, for a Model Y demo/display vehicle that's coming from the Austin Gigafactory. They expect to receive info for the first customer Model Ys coming from Austin soon, but that doesn't appear to be based on any specific info from Tesla higher-ups, end quote. He said he didn't get to see the VIN, but was told that by 2 associates, and that they seemed excited to share that they'll be getting an Austin-built Model Y. This does seem to be pretty plausible, since we do seem to be seeing some pre-production vehicles there in that drone footage at Giga Texas, but at the same time, it is pretty common for inaccurate information to come out of stores like this, so take that for what it's worth. But if you happen to be going into a Tesla store, maybe ask them if they've heard anything on getting a display vehicle from Texas. All right, next we've got a couple of updates out of China. First, we did get the split between Model 3 and Model Y retail sales for December. So yesterday we talked about the total. That was 70,600. We now know that the split was about 40,000 Model Y and about 30,000 Model 3. So huge month and then a huge quarter for Model Y in Q4, about 77,000 domestic sales of Model Y compared to just 39,000 domestic sales of Model 3. That also suggests really strong Model Y production because heading into December, wholesale sales, so domestic and export, Model 3 was actually pacing ahead of the Model Y by about a couple thousand vehicles quarter to date, but with the December number, Model Y now moves firmly ahead for the quarter by about 8,000 vehicles. Obviously, we'll see when we do end up getting those production reports, but that looks pretty good for the Model Y. Though it is also worth noting that if we looked at the production versus wholesale sales, there was quite a bit more Model Y inventory heading into December than Model 3. The other interesting piece here is that for the year, Volkswagen sold about 70,600 ID 3 or 4 vehicles in China, which that's almost exactly the same as what Tesla sold in December alone. So kind of a fun fact there. And then because we are on the subject, let's talk about what Volkswagen did for the entire year worldwide as Volkswagen Group. they sold 453,000 BEVs this year. That is up a pretty impressive 96% from 2020. That growth rate understandably has been slowing down a little bit. I think it was 300% or something in that ballpark for 2020, now down to 96. Also, if we look at Q4, so the most recent quarter, year-over-year growth there was a little bit slower as well, only 46%. So it'll be interesting to see if Volkswagen can keep those growth rates up as the numbers get bigger and bigger and harder to grow as quickly off of. That 450,000 EVs, that represents about 5% of Volkswagen sales for the year, and that was led by the ID.4, which they sold about 120,000 units of. Even with that pretty good growth, it does look like Volkswagen missed their electric vehicle targets in general. At the beginning of last year, they had said that they aim for BEVs to be 6% to 8% of their sales for 2021. And at the time, that wouldn't have been based on declining sales, which ended up happening this year. So that range would have suggested a production target for EVs of between 550,000 and 750,000 for the year. Now, I'm not bringing this up to harp on VW. I'm bringing it up to reflect on what the narrative was at this point in time last year, because there was a conversation that, Volkswagen may be targeting 750,000, Tesla trying to grow 50% off of 2020. That would also put them at 750,000. So, Volkswagen is going to close the lead and catch up to Tesla this year. Obviously, that didn't happen. Tesla ended up actually growing their lead in annual deliveries over Volkswagen from 2020. Tesla beat Volkswagen that year by about 270,000 deliveries, and this year bumped that up to beating Volkswagen by about 480,000 vehicles for the year. So again, not a knock on Volkswagen. That's obviously a pretty good growth rate. We'll see if they can continue that, but just a reflection on how things were being talked about last year and how they ended up. All right, last couple of things for today. First, Tesla has made a change to the Plaid Model X. They now are no longer offering it in the 5 or 7 seat configurations, 6 seat only. I've seen a couple of reports of Tesla reaching out to order holders for the 5 or 7 seat Plaid, and they've been asked to either convert to a 6-seater for free, no additional cost, or change to a 5 or 7 seat long range rather than Plaid. So kind of a strange move since they are continuing to make those variants for the long range. I can't see this adding a whole lot of production efficiency, but it does add some to the purchase price. Tesla has now updated the base price of the vehicle to reflect what previously was a $6,500 option for that 6-seat variant. So now the base price sits at sort of a strange $126,490. The other update is on India. Elon was asked on Twitter about the status of launching in India. He said, quote, "Still working through a lot of challenges with the government," end quote. And then finally, just as I'm wrapping up here, Tesla did set the date for the Q4 earnings call, and as expected, it will be after market close on Wednesday, January 26th, with the earnings call set for 5:30 p.m. Eastern Time, 10:30 p.m. UTC. All right, that is it for today then. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and I'll see you tomorrow for the Thursday, January 13th episode of Tesla Daily. Thank you.